Let's keep it with earnings and numbers. The focus is now on Tata Communications. The company reported the Q3 print yesterday. The margins have expanded. Data revenues up about 6%. This is, of course, year on year. And the company is saying that it's aiming to increase its data revenue to about 28,000 crore rupees by FY27. Well, let's discuss this further with Mr. Amur S. Lakshminarayanan, MD and Group CEO at Tata Communications. Mr. Lakshminarayanan, thanks very much for joining in. Good morning to you. So let's start with that one big headline, right? That you're looking to almost double your revenues by FY27. Now, our colleagues are pointing out that if you look at some of the brokerage chatter on the street, one wonders if this is a very tall order, whether the ask rate is too high and whether you're also factoring in maybe some inorganic growth, some acquisitions to get to this level of 28,000. So tell us the details.
Yeah, hi, good morning. Yes, I think we have set up an ambition to double our revenues. We announced that last year to hit from 14,000 to 28,000 crores. I think the ambition was based on the transformations that we were carrying out within the company to shift us to a product and a platform story and the digital fabric. And those investments are yielding good results in the sense that across all fabrics, be it the network fabric, the cloud and security, the interaction fabric, and the IoT fabric, we are seeing good traction and reception from customers. Our relevance has increased. So those were the parameters based on which we said that we have to aspire now for a much greater acceleration on revenues. So the
is this entire, sir, but this target of 28,000, does this mean entirely organic growth, doubling your revenue via the inorganic organic route, or will it also include potential acquisitions?
No, last year we had acquired Kalera and
yes.
The Switch, right? So I think those are helping us to add the capabilities and fill some of the gaps in our fabric story. And those two acquisitions are great additions to our portfolio. And we will be looking for opportunities which will add to the capabilities and bring value to us and to our customers. So that is part of what we do. But when we said that we wanted to double, it is not, calculated based on that we will have to do inorganic to achieve these targets. So our goal is to continue to build ourselves. Where there are gaps and when there is a good opportunity to acquire something, we will do so.
All right. So what you tried to reconfirm to us is 28,000 crores is on the cards by FY27. Is that correct? Even though we have some adverse, macroeconomic data that's coming out, you still say that that's on, right?
That is the aspiration. Yes, we are going to shoot for it.
Okay. All right. Because a couple of brokerage doors, they believe that you could be 2,000, 2,300 crores short, but we'll go with your word on that one. Let's focus on growth then. On a year-on-year basis, as you mentioned, you tucked in a couple of acquisitions. So that's why the base was higher on a year-on-year basis. You've grown by roughly around 6% or thereabouts. Do you think you get back to growing in double digit, say 10% plus in the coming quarters on a year-on-year growth?
Yeah, this quarter is, Q3 is the first quarter this year where we haven't had the tailwinds of acquisition. And so the Kalera acquisition was in October last year. So, and this quarter, the digital revenues has grown by close to about 10% on a year-on-year YQ-on-Q basis. The core connectivity business has somewhat been stagnant because of the key cuts that we had. And that marginally pulled down some of the overall data revenues. And as it picks up, we believe that we can begin to hit the numbers that we are looking at, double-digit data growth.
Okay, all right. Let's get a couple of other data points then, from you. The net debt numbers at around 10,500 crores odd. You sold some land in Chennai as well. What should the net debt number look like going ahead? I recall you telling us that the net debt to EBITDA was at around 2.3, if I remember correctly, and the goal was to bring it down to 2x.
That's true.
Outlook on the net debt and net debt to EBITDA?
Yeah, I think that's still our aim is to bring it to 2 or just below 2 over the course of the next quarters. I think we are on track with that, maybe slightly behind by a quarter. But I think that's what you would aim at. So get the net debt to EBITDA ratio to to 2x or below that is our goal. And that's the first goal post. And then, our ROCE, also we want to bring it back up, and you will see that improvement coming over the next few quarters on the ROCE front as well.
Okay. Sir, what can you guide on the margin profile? Some of the brokerages this morning, for instance, are pointing out that, adjusted EBITDA is slightly shy of some of the street estimates because of the core connectivity business not perhaps, performing at an optimal level this time. So overall, as we are exiting FY25, what can you guide in terms of EBITDA margins, and what's the profile, the trajectory ahead for the next couple of quarters?
All our digital businesses, as I've been saying, has a margin glide path, which will continuously increase and improve our digital portfolio margins. Just to go back and explain, from the levels of the margins that we had in 23, we had a decline. And it's more an engineered decline because of the acquisitions. The acquisitions that we did were EBITDA negative companies that we said we will turn around over the course of the 12 to 18 months post-acquisition. So if you take the acquisitions out, the core, the remaining data business margins are still holding up at around the 23% mark. The second area where there was a margin drag was because of the subsidiaries, and we said that we are going to initiate a strategic review of the subsidiaries. And we're very pleased with the progress that we have made on those. For a start, the TCPSL business, we divested that business and we announced that last quarter. And that should help that should reduce the drag that we had. And the second is the TCTS, the Transformation Services business.
Yes.
Again, by exiting some of the non-profitable contracts, again, that has turned around and is profitable in the last 2 quarters. And that has also helped in reducing the drag. And the third is the incubation that we were doing of NetFoundry was, we said that we will bring in external investors, so the cash burn from us will sort of reduce there. So these are one set of initiatives that we have done to improve the margin back. And the second is all of the digital portfolio, whether it's the next-gen connectivity, the cloud and security, and the IoT fabric, and the interaction fabric, which is where the Kalera sits. All of these digital portfolios have a margin glide path that's on an improving trend as we speak. And that should help us to get our margins back to the 23 to 25% that we have been saying that is.
By when? By when?
That should happen. I think it will continuously improve. We said in the medium term, we will hit the 23% margin, which is back to the where we were before the acquisition.
Got it. Mr. Lakshminarayanan, we'll leave it there. There's a story this morning I wanted to touch upon. It's all about sort of AI and AI full stack. I think there's a newspaper story this morning saying that Tata is gearing to compete with US hyperscalers and Indian infrastructure players like Reliance Group to offer full stack AI cloud platform. So maybe we'll touch upon that as well. But, short of time, so we'll have to say thank you. Appreciate your time here on CNBC TV 18.